Let's look at an example of types of sales. So when you make sales, your inventory goes out, therefore credit sales. And then you will either receive payments in form of cash or in form of a check or on credit. If it's on credit, you consider that as your trade receivables. Now, when we are focusing on sales day book, focusing only on this area, let's see how we can process this. Step 1, you enter or you identify all credit sales transactions. Step 2, you post to sales daybook. Step 3, from sales daybook, you transfer to ledgers. Under ledgers, you have sales ledger and general ledger. Under sales ledger, you enter it in respective trade receivable accounts. You debit these in the trade receivable accounts, and under general ledger, you open a sales account and you credit the total amount of credit sales. Now, let's look at an example of posting entries to a sales day book. Let's take an example here of 1/1/2006, credit sales to Mr. A. And you allow trade discount of 10%. Now, what does trade discount mean? This is a discount provided for bulk buying. On 15th, there is another credit sale which you did for Mr. B. And you allowed a trade discount of 5%. Here you sold for $1,000 and for B you sold it for $500. Now let's see how we are going to prepare a sales day book. These are the main components: date, details, and you have two columns to write the amount. Now let's look at the first one, which occurred on 1st of Jan 2006. You sold to TR Mr. A and the amount was 1,000. Here you have a trade discount of 10%. Therefore, let's calculate the trade discount. 1,000 into 10 over 100, which gives you 100. Therefore, now he is liable to pay you only 900. Let's look at the second example, transaction 15/1/06. Trade receivable Mr. B. You sold for 500, but he avails a trade discount of 5%. So 500 into 5 over 100, which gives 25. Now we can find the total of this, which gives you. Now this will be transferred at the end of the month. transferred to the sales account in the general ledger or nominal ledger. How are we going to show this impact in the ledgers? Now, let's open two ledgers. Before that, let me explain the types of ledgers, the classification of ledgers. We have three classifications of ledgers: sales ledger, purchases ledger, general ledger or nominal ledger. You enter all trade receivables under sales ledger, all trade payables under purchases ledger, and excluding TR and TP, rest of all the ledgers goes over here. So sales account, purchases account, sales returns, purchases returns. Okay. Now let's see how to post these entries. Now you open a TRA account and then you open a TRB account, and then let's open another account which is sales. TRA belongs to SL, sales ledger. TRB belongs to SL ledger, whereas sales belongs to general ledger or nominal ledger. Now you need to know the double entry for credit sales. You debit trade receivable account and you credit sales account. Now let's debit it. Go to the debit side, 900 for A, which occurred on 1106, opposite account's name, sales or credit sales. Over here on 15th again, another credit sale to B, which is 475. And then you take the total of the sales figure which you entered on the credit side end of the month, and you enter here total trade receivable as 1375. Now you know how to post entries for credit sales.